Technical and fundamental analysis for British pound US dollar Japanese yen and euro US dollar. Forex pair British pound US dollar. Bank of England expects inflation to decline in summer. On Thursday, British pound US dollar traded in multidirectional dynamics around the local highs of February 2nd. The head of the Bank of England said that the regulator's priority is to fight inflation. The consumer price index accelerated to a record 10.4% in February, forcing the Bank of England to once again raise the interest rate by 25 basis points to 4.25%. Nevertheless, Andrew Bailey believes that inflationary pressures will begin to ease by summer. In addition, the head of the central bank believes that the British banking system is quite stable and is unlikely to suffer from the problems of the financial sector in the US and Europe. The British statistics released the day before had no significant impact on British pound US dollar dynamics. There was a decline in consumer lending in February, but there was a sharp rise in the number of approved mortgage applications. Today, the final estimate of the fourth quarter gross domestic product will be released in the US, while the Bank of England will release a report on the first quarter of 2023. The Bollinger Band indicator on the daily chart is showing growth, as is the moving average convergence-divergence indicator holding a buy signal. The stochastic oscillator is testing the overbought area boundary of 80% from the bottom up and may enter the range of maximum values in the near future. Upon breakdown of the resistance at 1.2350, we continue to form long positions with the next target at 1.2450. Stop loss is set at 1.23. If the price fixes below support at 1.2283, the investor starts selling with take profit at 1.2176. Protective stop will be set at 1.2350. Analysis and forecast for US dollar Japanese yen. US dollar Japanese yen continues to recover losses and in the Asian session on Thursday trades around the local maximum of March 22. Decreased risks of the banking crisis in the US again returned investors to buying the dollar. In Japan, the end of the fiscal year is coming, which traditionally puts pressure on the yen. The Bank of Japan is hesitant to move to tighten monetary policy and says that a rate change is possible under certain price and economic conditions. The regulator, the only central bank of developed countries, keeps interest rates in the negative area -0.1% and 10-year bond yields near 0%. The new governor of the Bank of Japan, Kazuo Ueda, is expected to take up his duties in April. However, the new head of the central bank has previously spoken of continuing the dovish course of Haruhiko Kuroda. Tomorrow there will be a block of economic releases in Japan. Investors are waiting for inflation report, industrial production data and retail sales statistics. For lovers of Forex trading based on news, the Asian session on Friday promises to be volatile. The consumer price growth is projected to slow from 3.4% to 2.7% in March, though core inflation may rise from 3.2% to 3.3%. The Bollinger Bands on the daily chart are returning to a flat. The moving average convergence-divergence indicator is in the negative range, but it is quickly approaching the zero line and holding a buy signal. Stochastic oscillator rises to the 80% level. After the pair has fixed above the key resistance level of 133, we open long positions with take profit at 134.54. Stop loss is set at 132.20. Decrease in the pair below 132 will be a signal to sell towards 130. We place a stop loss at 133. Euro US dollar. Will a lifeline help the dollar? The dynamics of foreign exchange assets in the Forex market depends on many factors. This is the difference in rates of monetary policy, economic indicators, and various risks, financial and geopolitical. But there is one more important trading criterion, the volatility of currency pairs. The breadth of quotes fluctuations of this or that asset allows you to earn in currency trading on the Forex market. Volatility has lately been supporting the dollar, sending euro US dollar into a downward correction. Bank of America analysts note that expectations of a Fed interest rate hike to 5.25% have lifted volatility in the major currency risk to 3-month highs. But volatility peaked last fall. At that time, the dollar index was the undisputed leader among other Forex indices. Of course, much of the demand for the greenback stems from the habit of investors to buy the dollar at any alarming signals. In 2022 it was the dollar that was the main defensive asset at Forex. But now that the epicenter of the banking crisis has become the United States, investors began to look at other protective assets: gold, the yen, the franc and the euro. The Bank of America believes that increased volatility in currency pairs could return when U.S. inflation is high. This is a logical explanation, as the Fed still considers the fight against inflationary pressure to be its main task. Now the regulator's monetary policy has been interfered with by fears of spreading banking problems, and the futures market is lowering the maximum rate to 4.9%. However, if the situation in the banking sector stabilizes, it is unlikely that the Federal Reserve will move to a wait-and-see attitude, risking the loss of all gains from previous restrictions. Of course, it is not rational to expect a 6% rate from the Federal Reserve, but 5.5% is a realistic target that has been discussed many times at Federal Open Market Committee meetings. In any case, the European Central Bank's potential for a 75 till 100 basis point rate hike creates support for the euro. But this is in the medium and long term. In the short term, volatility growth favorable to the greenback cannot be ruled out. In addition, let's not forget the basic rule of Forex trading: buy on rumor, sell on fact. Markets are excited about the prospects of European inflation growth up to 5.7%, but the statistics release might turn out to be a disappointment for the bulls in euro. On the technical side, if the euro-US dollar buyers are unable to get a grip on 1.082, it will be possible to sell the pair in the short term.